Welcome back, everyone. We are live from Headley, BC in Canada, and we have our co-host, Gaurav Malik, live from India. How's it going, Gaurav?
Awesome, awesome. How are you?
Oh, fantastic. Well, except the snow hit the ground nowadays.
Oh, okay.
But I sure don't want to hear what the weather's like over there. I might become jealous.
Yeah, it is 22 in day. It's sunny out there.
Oh,
They start 8,
oh,
5:35, and the evenings are pretty good. Like in night, right now it's maximum. The minimum it goes right nowadays is like 8 or 9, not more than that. So we don't have heaters. We don't
oh,
need like heaters or heating. That's the reason I'm
oh,
staying back
yes.
longer.
Well, let me tell you, we have scrapers, ice, snow,
Mm.
snow plow, salt.
Yes, I know it's
Ev-
so difficult.
Everything is back. I had,
Yes.
yeah, had to pull it all out of storage, and we had a pretty good snow the other day, actually, and woke up with like, about 5-10 centimeters. So
Hmm. So, how was your
yeah,
last meeting? I
okay.
was on the call, but I was on the background. But
Yeah,
wanted to hear like how did it go, and what did you find?
it's yeah, it's been 2 weeks that we haven't hooked up here. Way too long, buddy. I'm just trying to
Yeah,
figure out like how the
yeah.
system works and how StreamYard is doing these, but it's heavy on the resources, and it's hard to do it on the internet. So, and then my computer acts up sometimes. But
Mm-hmm.
last meeting we had Chris Albanese, and
Mm-hmm.
I had a comment from a guest, a watcher. It was like seeing a tennis match. Every time it went back and forth, and it was so much. There was so
Mm-hmm.
much gold, and one of our guests even said, "I'm so interested into the life insurance, the infinite banking concept, because
Mm-hmm.
this show is starting to get him intrigued into it." But
Mm-hmm.
yeah, no, it went really well, and Chris was a great host. He's such a wealth of information. He's got awesome stories. He's been doing it for 25 years, and he's helped so many people and helped his family, and he's grown his wealth to like something unmanageable. He's an expert on Airbnb, so it would have been good if you guys would have discussed that too.
Yeah, but it
But
will be off the
unfortunately,
topic.
yeah, it would. Well, I don't know.
So much to
It's
discuss.
all about
So much to discuss within
yeah,
1 hour. You know.
yeah, yeah. When I
Sorry.
sent him the agenda,
Mm.
he said, "Are you sure you're gonna do it all in 1 hour?" I was like, "Well, let's try." And
Mm-hmm.
every show is like that, right? so
Yeah. Yes, absolutely.
but yeah, the whole scope of the show was just to teach our and educate our listeners to think outside the box. Like we feel like, especially in these times, winter's coming over here. It gets a little bit. You lose hope and motivation, but it's just a loss of moving and action, right? So it's like if you have different tools in your tool belts, you can do more. Like, I always go back to either farming or construction, right? Like if you have a tractor, you can do so much more than you can do with a hoe, right? And so
Yeah.
bring like my purpose to bring on this guest was to bring an out of the box sort of mind thinking, so that it would
Mm-hmm.
help out us and whoever's watching to think, okay, well, there's other ways. So then you even search for other people, like, and when it goes to like what we do, It's like the infinite banking concept. So it's not that we have to be dependent on the banks. There is other things that you can do, right?
Yeah.
And so it's about knowing the tools, but also putting them to work in a
Yeah.
sense, right? Like you
Correct.
can't buy a tractor and not know how to use it and then what to do with it, right? And what it does too. Like because you got to see, oh wow, okay, yes, the tractor is going to make me so much better. It's going to up my production, up my income, and then go from there, right? Um, so well, like this show has already started. It's already been 5 minutes. What we're gonna do today is go back to our Sprout family with this episode 14. So I hope you're ready because as we speak a lot in our presentations with clients and out there in the media, social media, we build financial houses, right? So this show is about the foundation, and it's our favorite topic, isn't it?
Yes, absolutely.
Okay, let's start with
Foundation
the
of the house.
yeah. Let's start with the quote of the day. Today, I have the quote of the day in front of me. Insurance is the only place where you can buy dollars of future certainty for pennies today. That's how
Yeah.
families build legacy, not by chance, but by design. Okay, why does this quote matters? Because the other day you were doing a team meeting, Garv, and when you said, "Look at it this way: the only way to build a legacy is through insurance." I was like, "What?" I thought it was like you buy land, you buy a farm, you build it and you pass it on. But in reality, when we have to, and that's what we do, it's like when you plan estate planning, it's about passing on that property with money in place because you got to pay the taxes, you got to pay all the bills, the final cost, the debts that are incurred, the tractor, right? So that the family keeps going. And how do you do that? I was like, how do you do that? And what's the answer? Insurance, right? And so it's like, oh, okay. So it doesn't matter what you do. Think about this way. When we were talking about all the three types of insurance, and we're going to talk about it in this show, but when you talk about how so little you need to leave, like, for example, I just did a policy for 300,000, and you got to just pay $20 for 300,000. It just blows my mind how we put insurance on cars, but we don't put an insurance on ourselves when it's inevitable that we're gonna pass on and leave a legacy, right? So it's
Yes.
how do you build this foundation, and how do you make it so strong that it will support all of your house, your savings, your investments, and
A
that's
future.
this is one thing that I learned with Experior is that, and with you, Gaurav, is when you taught me that it starts all in the foundation because everything else will collapse. And when we have talks about how good investments are, how everything is in the world like of money and how to preserves and to make goals and dreams, but if you don't have the foundation, it can collapse, right? All of it.
Yeah.
So
Yes.
you need proper structuring, right?
Yeah.
So without, like, another thing is like without insurance, assets becomes a liability, right? So
Absolutely.
it's extremely important, and this is why we do it here as well. And we're gonna go explore the different types of insurance and how we strategize it. We'll bring in back our family and we're going to make a plan for them, but obviously every single family has a different story and there's different lessons to be learned. So just looking at this as we do a case study for what a farmer family would look like, but obviously there's so many different ways to do this, and today we're going to discuss one of them. Anything you want to add, Gareth?
Only thing I say, everyone got a chance to leave a legacy to their family, because so everyone has to go from this world. That's for sure. Like there's so many uncertainties, but the only certain thing is that whoever born in this world will die, and insurance gives you an option to trade that like moment for pennies, for like hundred of dollars, if you plan it well and you plan ahead. And it is the only chance, like that's what I say, that if you want to have $1 million cash, tell me how many number of people have in Canada. I don't think people have that money. When someone passes away, they leave assets in form of like not cash but other things. We'll see in the case also with Sprouts. And the only thing is those assets are dep- depreciates, because when you didn't plan your estate planning properly, government takes a portion of that in form of different things, probate fees, then your estate capital gain taxes. There's so many other things, which means that whatever you thought that this is what you will give to your family, okay, it's already declined by these things. So when you get insurance and when you plan it really well, okay, actually everyone has a chance to leave a legacy. And legacy doesn't mean that it has to be like million of hundred of dollars. Legacy is something that you give to your family, to your parents, whoever is still surviving when someone passes away. They'll live off a very comfortable life. I say comfortable, not luxurious. Comfortable means that someone's absence shouldn't affect their lifestyle. They shouldn't be degrade on their like food, number of let's say vehicles, or like how they used to live. If they maintain the same and they have more money to basically build from there, that's what legacy means, and that is legacy. And insurance for sure will definitely help everyone, because everyone has to die one day. I haven't,
Yes.
and I asked this one question. Like I asked, I was reading this book for insurance, and there was this one great line. Like he said, okay, tell me what is your annual income? And someone said, okay, I earn $100,000. Okay, and for how
Mm-hmm.
many years you will work? Said like next 30 years. It will be somewhere around $3 million.
Mm-hmm.
And okay, that's great. That's what you're gonna do for your family. Yeah, yes, I'm gonna do for my family. But if something happens after 10 years, who gonna pay? Give me name of three people in your life, three persons who gonna give your family those two residual of $2 million.
Right.
Name three people who will help your family once you are gone to replace that income which you were supposed to make, because this is what, and I am talking about current, and the answer was none. Like there's no one in the world who gonna help your family for what you gonna do. Maybe they will pay 5,000, $10,000, not more than that, if they are really close to you, because everyone has their own life to run, their own show to handle, their own families to take care. And people just forget this thing, that there's no one who gonna save you or your family. It's only you who can do it. And insurance is one way to make sure that your family don't have to run behind different people, and they they survive even if something happens to the main member, and they maintain that lifestyle. That is legacy. And I ask
Mm-hmm.
everyone on the call, just write down with your pen and paper how much you're making, multiply by that number of years are left, and find three names who will give you this amount to your family. If you don't have those names, reach out to Rico or me. Will definitely help. will not be a person, but it will be either of us. Definitely hand over that check to your family, and trust me, if it's $2 million, we're not gonna ask you like for $1 million. We'll trade pennies for your dollars.
Hmm. Hmm. Yes, that's
The start.
beautiful said. And then that goes right where we're talking about like the foundations, right? Like we build a financial house based on income. So that is the first questions that we should be asking is like, what do you expect for income for the next few years? What kind of job do you have? Where do you want to see it going? You know, like promotions and all that stuff. Or even if you're a realtor, like how do you see your income growing? And then you go throughout the different years, right? Like how much do you want to work, what do you get in return, and everything like that. So that's how we build the financial house. It's based on the income, whatever comes in, right? And then we split it up and put it in the different rooms. But the insurance part, it's the protection that is not, it's not going to be an extra. Like we try to nail it home that it's not an extra, it's an essential thing that you do. Just like if you were to insure your car, and if you were to hurt somebody, you know, the insurance company will pay that person, right? Hopefully.
Yeah.
And then, you know, and you're going to have this your people protected, right? And it's not going to be like uh where is this money going to be coming from. You don't have to ask yourself where the people are coming from if you have proper protection in place. So that is such an important thing to have, because even with farmers, we take it always back to farmers, and it's like we have unpredictable seasons, right?
Yeah.
That's one of the main things. We can't expect the weather to be consistent and be perfect. You know, there is tools out there. Obviously, one that I can think of.
Fight those. Yes. To
Yeah,
fight those. Yeah.
yeah, and I mean, like, there's greenhouses, you know, that you can, you know, sort of control the weather in some ways. For here in Canada, I don't know what's in India like, but greenhouses are well used to have mitigate that risk. But obviously, there is also crop insurance, right? And then
Yeah.
uh, when you're working hard, you know, there could be injuries happening. You try to stay, you know, most attentive, but if you, for example, one day, oh, the cow was like giving birth, so you had to stay up all night, and there you are taking care of the babies, and then you wake up the next day and you're like tired, but you still got to do all your chores, right? And then, oh, you hit yourself on the knee with the tractor, and then what happens then? Who's going to continue on? So there's also like, if something happened, you got to have that sort of preparation, right?
Exactly.
And what about when the tractor breaks down? What are you going to do? Oh my God. Like that, the tractor is like having 10 people. What if 10 people quit all in one day? Right?
Yeah.
So there's different things as well, right? Like, or now we're seeing a lot of families are stretched over with credit card debt,
Mm-hmm.
and they're just going paycheck to paycheck, and all the loom and gloom out there that it's about, you know, like, oh, how are families keeping this up and everything like that. Well, it's it's just bad budgeting. It's just bad
Financial
teaching as
planning.
well.
Yeah.
Yeah, management of money, bad management, right? So so that's what's important in the foundation, and that's what we're trying to represent here. But Gaurav, you're really good at this. Can you give us like the overview for all the types of insurance, that the three types that we have available that people might not know about?
So basically,
Oh,
like most of
oh,
the
we have a
people, they
comment here. Talk to any probate lawyer; they will tell you horror stories of testators without insurance. Yeah,
oh,
well, we can tell
yeah,
you stories.
yeah, any probate lawyer, yes, that's the guy to go to and ask. Not only the insurance, without a will as well. Like
Yeah.
they know that how people struggle. Actually, people living in your home, they're shunted out because there was no proper will or stuff like that. And like you said, like what are the different kinds of insurance? So most of the people, they think that the insurance only means that if someone will die, they will get the money. So it is not only like life involved in this one, because your income can stop in multiple ways. One is life insurance, yes. Like what happens if
Hmm.
something happens too soon? Like your income is stopped, then who will help your family? Second one is disability. It is even more critical because now let's assume the same farmer was working and he had a lot of responsibilities and something happens to him. He also become a liability to his own business. Who will take care of those expenses which are required to take care of that farmer? He's
Right.
to go physiotherapy. Yeah, like no doubt, like healthcare is free in Canada, but they don't pay you for the hours you're recovering. What happened in that times? And injury can happen at any time. It can happen. You can slip on the road. You can hit to the far with the plow. A bull can hit you, or you
Yeah.
can get involved in a car accident. There's so many things. And so, second type of insurance is called living benefits, which is further categorized into two. One is disability insurance, which is like you get any type of disability. There are two kinds of disability. One is your temporary disability, and other one is permanent disability or long-term disability. So, as a farmer, I will specific talk about farmer. Farmers are not
Yeah.
covered by any of the employers. They don't have
No.
any group benefits or something like that. People who are working in union or like other places, they still have some kind of disability insurance through those group benefits, but farmers don't have anything. And farmers being injured have higher chances than someone who's working behind a desk
Oh,
any day.
100%.
There are like
Anything.
thousand ways I can tell you, because one of the ways I hit my brother when I was young, his middle finger was torn from this much, and he was like, "Oh," and I got fainted. So that's like one stupid
Oh,
way, like one stupid way. And then there's so many ways to get injured. So there are different options which help you to basically cover your that income, loss of income. Just
yeah.
imagine that's a loss of income that's covering, not your injury. Like the time you are not able to work, it may be 2 years, 5 years, it may be 25 years as well. We're gonna take care of that business. That's one thing. Like you can sell your business, that's fine. But who will take care of you? You don't have the main guy is himself looking for uh, some outside help. Who will help you? Again, name three people other than your family who is gonna take care of you. None.
Right.
And your family will take care of you, but who will take care of your whole family as a whole? Like who will put that money on the table to buy those medicines and everything? And the third type is called critical illness. Like there's so many people who said that, oh, I'm fine, I'm healthy, but let's go by the facts which were released by Canadian health government health services last year. uh, every second guy, which I'm saying 50% of Canadians have issue either a stroke, cancer, diabetes, or any serious ailment. Like there are like 25 others. I can name them like heart attack, brain. Then there's so many other things. I can keep on the list going on. There are like 26 major things. It will
Yeah.
happen to
Well, I'm sure we
every
all heard about.
every every second Canadian. That is called critical illness, which is even more dangerous because something happened and you survived that something. And now in disability you don't have that much running expense. But when someone is critically ill, like you have someone has a cancer, the medicines are super expensive. Then you need special care. It has to be a nurse who will come home. You will recover in maybe like let's say next 3 years. But what about those 3 years? In critical illness, you got a lump sum amount, that too tax free. Let's assume same Sprout family, main earning member got cancer, and he survived cancer. And let's assume he put 200,000 as his critical insurance coverage. The company will pay $200,000 while he is living. And let's assume after some time he passes away. The life insurance will pay that amount. So 200,000 was what the main Sprout guy needed to take care of himself and his family during this dark times. Like critical illness is not only your financial defeat, it is one of the biggest defeat is your mental. The whole family is scared. When one of the members goes under such a big surgery or like chemotherapies, I have seen myself, my friends, very close parents, both of them they got cancer 2 times. Can you
Oh,
imagine
yeah.
twice? And his dad cried that I can't go through chemotherapy. Can you just kill me? I don't want to get those chemotherapies. And the whole family was shattered. What money will do? Nothing in that case. But it will definitely help you to fight other things which you have to worry about food, about bills. So we have these three kinds of insurances. Life insurance, something happens, even something doesn't happen, there's some different types of life insurance, you still get paid. Even if you live longer, that's also one problem which covers under permanent insurance, that it will help you to retire. Second, disability, something happens short term or long term, depending upon your monthly income you will be paid those monthly expenses. And for business owners like farmers, they take care of your business expenses, overhead expenses. If you are an employee, your farm or you will get paid to pay yourself. And this is upon the selection, like how long do you want to get paid? The option is till 75 years. Something happened second year or third year only, for next 75 years, they're gonna pay a certain portion of your income. And critical illness, in which if you get any critical illness in you survive more than 30 days, you will get the lump sum amount with the tax free. So these are the main kinds of insurances, and then we have like so many other insurances like fracture insurance is there, your job loss insurance is there, then they're like
Mhm.
uh, uh, their final expense insurances are there. There's so many other kind of insurances, but these three are the main thing which make your foundation. Because foundation, this is your financial house, strictly depends and only depends on your income. If someone doesn't have income, do you think they will plan their financial house? No,
No.
they don't have
Yeah,
income. They'll
exactly.
never they never think of investment. They will never think of estate. They never think of kids' education. No opportunity fund, no risk fund. Like it is like zero multiplied with zero, it is zero. You can't take anything written out of zero. And so, but when someone makes an income
Thanks for
and they
that.
want to make sure that their foundation, this is their income is intact, even something happens, which is for short like life for short. Yeah, like everyone has to pass away. That is for sure. Disability, as per your occupation, if we are talking about farmers here, the chances are very high because of the workplace environment. Third, critical illness. Every second Canadian have one kind of critical illness, and this will increase in near future. It will never decrease. Thanks to our good food, to GMO foods, pesticides, and all those guys, we are basically getting sick every day. We're living longer, but we are sick when we're living longer, and
Yeah.
number of people getting those injuries or those critical illnesses are higher than ever before, and it will increase in future.
Well,
These were
exactly. Like, yeah, that's what I wanted to add too. Is like when we talk to people and we do these financial houses, it's like being a realtor. Like how people ask you, "How's the market?" Well, the market is doing whatever it needs to do, right? If it's a correction or anything like that. When we talk to people, nobody asks, "So how are people doing?" you know, not so good. Like
always
there's
not so good.
not so good because it's like when we do these presentations, it's like 90% of the people don't have a plan. But like you said, not these 90% of people do have an income. They do need to have planning. obviously, there's people that don't want to have an income, choose not to work, but that's probably like the 1%. But when we talk about the 89%, is like you have to have something in place, because then it's like, even if you don't know where your money is going. And I just want to add that all that we do is free of charge. We don't charge a penny. It's you get to explore what we do, how we do it. You get these financial houses built, and you get these personalized plans that we're just doing with the Sprouts, and you get to see, like, fully have a vision, because you can't have a vision if you don't have a plan or goals as well in mind, right? And that's why it's important to put it all on paper. Well, that's my opinion. Everybody
Yeah.
else can do whatever they want,
No,
but
it very, very rightly said. Like we help people to visualize their present and their future based upon what they're doing today in terms of their money management. And people
yeah,
avoid these tough questions with themselves. It's
yeah,
like some the belly fat and they say they know they have to go to run, but they never go to run. Unless then someone say, hey, you're belly fat. Yeah, I know I need to go to run. But they don't understand what is your future after 10 years if you remain like this. You'll be in a hospital. It means you're bad financial planning.
it's like you said, the tough questions. Why do they have to be tough? Like, why are people like shy of talking about their money or their income? It's like they think,
Again, the money system is made like that people spend it, people earn it, people do everything with it.
yeah,
And everything is made so easy to do. Only thing is which is not easy to do is to understand it. Once
yes,
you understand how money works, all your problems are solved. And that's what we do. We help you to understand like how you're thinking about money is not the way you should be thinking. It is not a curse. If it would have been a curse, why you are working for it? Leave everything and go to jungles. Don't worry about money. But if you think that it is important, that it is important to understand how money works. And this is actually what we do. We help you to understand how money works and how it is currently working for you and how you are working for it. If I ask anyone in the world, do you want to work? They'll say, nah. Okay, do you have any other option to earn money than working? Like, no. Then why do you say you don't like working? Because they hate what they don't understand. Once you understand like how money works and how it can work for you, and you don't have to ever stress about it, is to get education. And we educate people. This is
yes,
we really educate people how to build their own financial houses, and we do it in a very scientific way. It is scientific. Like EFA, the whole process is scientific. It is made in such a way that it will shuffle all your thoughts and all the facts, and we write it down everything in front of you, and you will find some facts which you never thought of. I'm like, oh my god, I never thought of that. I'll run out of my retirement income in next 5 years. Then what? I will never retire. And people never understand this. And that's why we see a lot of people who are still working in Walmart and those. I've heard so many stories. Like those were
hmm
guys who had good money when they were young. The only thing, nobody educated them about money. And then I meet some people who got retired at age of 55, 60 maximum, and they live off pretty well. And they're like same people. Like they have 2 years, same nose, everything is same. What changes them? This is
right,
how they see money. This is how they educate. They know the power of insurance, they know the power of investment. Instead of avoiding those hard questions, they actually sat down with one great advisor at one point of time, understood all these hard questions, and find a way like how these hard things can be easy for you if you plan it well ahead. And this is what changes your future. Nothing else. Like even if you get a lottery at one point of time, if you're not smart
yeah,
with money,
the
you lose all the
concept.
money next 2 years. So there was a study in the world that even if you divide all the wealth equally between the people, Okay, after 10 years again it will be same, because it is not the how much money you have,
There
it
is
is
in
like
circulation.
how do you see the money. And make you see the money which we never, like you have never seen it or never heard it. It's not like a typical insurance, like I will not name the companies, how you get rich quick scheme. No, it is not like that. We make you understand about how money works in different times. Like Rico did the last presentation with this amazing guy, like where we
Chris.
discuss how, Chris, how we can basically borrow money in different ways. This is what we do.
Yeah. Yeah. Amazing. Yeah, like it's hard even for us as we go through the journeys of other people and talk to other people. It's like, wow, yeah, they're tough conversations to have, but they're so freeing. Like it's like putting some stress on people. The response is to spring back, right? And come up with the solutions, because there is solutions to any problems, right? It's just that, again, like Einstein says, you have to switch the mindset. You got to change the mindset that you got to that problem. And what better ways to talk to other people? Or even if you're shy about it, just talk to your friends. Hey, like, talk to successful people that are around you, like, ask them, how did you get there? Like, I always do that. I have a bunch of people that usually message them, like when I saw Chris, I was like, how did you do it? I want to learn, right? Are you able to come on the show and show us what you do? And it's like, sure, yeah. So, like, these people have bought themselves something that we don't have, and it's time, because
Yeah.
money buys you time as well, right? And so,
You
but by buying your time, then you
don't have
can do,
money,
yes, then you
and that
can do,
when you are not working.
yeah, yeah, exactly, right? And it goes with everything, any business. It's just like that. It's like buying your time. And
Yeah.
this is what we try to do. And obviously, when you needed to protect it, like Garv was mentioning about disability insurance, you need to protect it so that in case of you can't produce it, you're not stressing out or depending on somebody else. You don't lose control of your
Yes.
farm, and you don't have to, because most of the times what happens, especially in farms, assets starts getting sold out, right? Like,
Yeah.
oh, well, we can't afford this. GoFundMe as can't do much. Like, we gathered $10,000. Now we have to sell the truck, and then there you lose the way of going to the market, or you're gonna downsize with a worse truck that you need to fix, right? So it's like, let's plan, and then proper preparations. You're gonna have proper outcomes, right? Obviously, we can't predict the future, because if we would be millionaires, but at least we can plan for the future,
Yes.
right? So
Yes.
let's take it back, to what types of insurance are out there. um, the most known ones, for life insurance, let's speak of. The most known one is term insurance. That's the lowest cost, and it's just pure protection, and you can make it at a lowest rate to cover your income, and your liabilities and your final expenses. And we'll show here with the sprouts what it can be done. But you can also combine it. Like, a lot of people think, oh, I just got one policy. You can have multiple policies. You can layer them. You can have them that, as you're aging, you don't have as many responsibilities, so you don't have to have as much coverage as you need to when you're young, right? So you can have it like that, it fades away, and then at the end, you're still going to cover your final expenses and your funeral costs, right? And that can be done with permanent whole life insurance or universal life insurance. There's the different types. So those are different shows as well. I mean, we touch base on whole life, but we're gonna make some more shows about universal life because these are all the tools, and obviously they're adapted to the different people. So we need to find out what you're able to understand, and what you understand you will apply and put it into action, right?
Yeah.
And then like what Gara was talking about, there's critical illness and disability. So let's go and take a look at now at our case study, the Sprout family. And where we left off was when we were looking at their data input of what we had done in the expert financial analysis. And for people that haven't tuned in, you can go and watch back a couple of shows. We started at episode 10 discussing this Sprout family and doing the EFA. And so Jesse's income was at $96,000, and his survivor goal, like to have 70% of his income being provided to his family, and he would like to provide the family with 15 years of income. And same thing went for Lana. We had 31,200 for her income, and the factors are the same. And then we put $10,000 for final expenses, funeral cost, and we are conservatives about the investment portion, because obviously when you get a lump sum, you are going to invest it. You're not going to take it all out and spend it. We recommend to be investing it on a safe basis. We could give you a rate of return of 5%, and that would increase its value over time and be able to provide all their income needs for the future. They have a mortgage on their farm right now at $420,000, and they want to save up for the kids' education. So even, yeah, when we talk about education, see, these are expenses that as you grow, as the kids grow and they start their education, these will be going away from the final expenses. So the insurance can decrease on that sense. You don't have to be covered for that, right? And then so far, they are paying $95 per month for insurance. And let's go take a look at the results when you put it all together.
You can put
Yeah, the total coverage with all the calculation put together, and the kids' education and the final expenses for Jesse alone, he would be needed to cover, let's say, $1 million, right? And then when we talked about Lana, if we wanted to do under those terms, her coverage would be $500,000. So when we talk about policies and we talk about the structure, this is what we would recommend in this instant, right? So we would have a permanent policy. This is a participating whole life or universal life, depending on the risk and their money management skills. But most cases, we would recommend a whole life because it's more consistent and more predictable into seeing the outcomes and the results and the numbers. And we would do a coverage of $250,000 with a premium of $400. This, I don't know if we explained it in other shows. The starting coverage for this insurance is it starts at 250, but it grows over time as you increase your cash value. You have to the insurance company will buy more money, more insurance coverage, and then your coverage will grow. So it's kind of like an airplane. It becomes more efficient the longer it flies, right?
Very well said.
So
Yeah.
yeah, so it'll get you to the place that you want to go. So then we're going to put in a term 30 for 300,000. What's a term 30, Gaurav? What are these
So,
terms?
like the name suggests, like term 30, term 20, term 10. Term is basically, like the term says, is a duration. So it is the duration for which you will be covered under this particular rider or this policy. When they say term 30, it means from today it will cover you for next 30 years for that amount with that same premium. So for this case, he will be covered for $300,000 for next 30 years. Okay, monthly premium of $70 declines or drops after 30 years. Decline or drop means that you once that term is over, it is gone. Okay, if you have to repurchase again, you have to repurchase at a new amount, which will be like way higher. That's why we don't suggest term for like old age people. Okay, and if you see like covers remaining mortgage years, so this is what layering means, and this is what Rico here was referring that we people think that it is one policy. This is how they sometimes underinsured or they're overinsured. So over here, Rico has beautifully done it like as per the liabilities and the responsibilities and chances of them living longer, all of them are covered in this one single policy. Like if they live longer, permanent policy is there for retirement, emergency, or legacy, because you can withdraw money, you can borrow money, or you can transfer this money. In any case, this money is gonna be yours. Second is your term 30 rider, which will cover for the mortgage remaining mortgage years, which is $300,000. Once this is gone, then this amount is also gone. But if something happens within 30 years, their family will be paid 250,000 plus the dividends, which will increase their coverage, plus $300,000, which will take care of their mortgage. Then the next one is term 20 rider. It's like mid-term income protection, because for next 20 years, like we were discussing, they will make some amount. Okay, and with this it is only $40, which means that after 20 years that this will be gone, because you will not be making any money, you don't have any responsibility left for to make money, your kids are grown up,
Yes.
taking care of farm and everything. Sorry. And then there's this term 10 rider, which is for short term. Like term 10 is like 10 years, which is very short for equipment. Like there was a physical equipment they had. So it will cover for the initial, like very, very immediate. So it means like if something happens within 10 years, he will get 150 plus 200 plus 300 plus another 250,000. 10 years gone, one of the liabilities like line of credit or equipment are paid off, they're left with only term 20, term 30 and a permanent. If something happens up within after 10 years between 20, they will get 200,000, 300,000 and $250,000. Nothing happens for 20 years. Then they're left with term 30 and permanent base. Nothing happens for 30 years. And that's what we wish for. We wish that none of our
100%.
clients ever have to go through it, but we plan for unpredicted events. This is like what ifs. We don't want you to have if and buts in your life. And nobody wants to have those if and buts once we are earning and we are working so hard for a whole life and you still have if and buts. That's our question. Then your financial planning is not good. So
Hmm.
like Rico said, this it is called step insurance. Okay. It is mirroring the farm's debt timeline. As mortgage and loans reduces, so does the term coverage. And this is called layering. It helps you to save a lot of amount in premiums. and we will show you on a different, uh, I'll say, or you can show it right now. Why not, Pico? Do you want to open a menu life and show like how
Uh,
much this coverage will be for term 30 and how much it will be when we add different coverages, or you want to take it for next time?
Yeah, we'll leave it until next time because
Okay.
yeah, like what we're trying to represent here is just how the financial analysis. I mean, it doesn't really matter what the actual cost is. We're just trying to show you that by layering, you are like what the total expenses here. For example, it's 540, but now you're protected for $1 million up to 30 years. You're protected for $650,000, right? And you leave with peace of mind for having $600 a month instead of, because a lot of people make the mistake of investing it. Well, what if I invested and then I get my money on the return? But $600,000 invested today, if something happened, in a year, even in 10 years, that $600 a month will just be like $60,000, and then you're throwing away 150, like $1 million coverage, right?
Billion
And
dollar.
it's, yeah, it's $1 million coverage. And why do that to your family? Why do that when you, obviously, like you said, we don't wish it on anybody, but stuff happens. and
Yeah.
and and like with what's happening today in the world and the way nutrition is and everything like that, we get to live longer but in more disability, right?
Yeah.
So it's important to have these protections because it's like, it's essential. Like, you don't want to put the burden on your kids and be like, oh well, now I have to take care of my dad, and then they lose their life, like like the true life, not just they lose their life because they die of exhaustion. But I'm just saying, they don't get to live the life and they don't get to make the experiences that they were supposed to because you had an accident, right? And
Yeah.
or it could be your friends, it could be your parents, whoever, right? That it's going to step up. Like, it's those people that you asked, which are the three people that are going to help you? Is this the kind of burden you want to put on them? Yeah,
Yeah.
this is the hard question. This is where we always go. It's like, yeah, okay, well, make that list of those people that are going to ask you, like, is going to help you. Is that what you want to do to them? Is, like, in case of, I mean, obviously a lot of people can say, oh well, but it's not going to happen, not me, not me, not that. But hey, we are here, and when we hand those checks over, it feels good to hand the check over, but at the same time is like, could have done more. uh,
Yes.
could could I have protected them? And you shared 2 weeks ago the story about your friend, drowning, and then they had to go and cover the final expenses, and the parents were, you know destroyed, right? Like, you lose a kid, do you really think about money? Oh my god, like, it just destroys your mental capacity, and it ruins your life. I'm not saying that money is going to bring the kid back or help them, but at least is going to make you grieve, right? Instead of, well, I got to go back to work, or I got
No.
to ask 1,000 people for $10, right?
And but the thing was that money could would have helped them to bring the body back to India, for which they have to go, and which is even bad. Can you imagine? Like
Yeah,
someone kid dying in a third world country, away like thousands of kilometers. Something happened. You're grieving, and then you said that okay, you have to pay this much amount, then you will get the body. And then you check your bank balance, you got nothing because you spent everything on the kid's education. It was your whole life investment, and he's gone like that. And
right.
then you don't have money to bring that body back. How we were feeling? We did everything. We raised $30,000, but how many people will step up? Like we stepped up for our friend. Just ask yourself. Not many. That's why this protection is important.
Or at least talk about it, like it needs to become conversation of, instead of like talking of the hockey game or all these shows and everything like that. These are like, the tough conversations that we call them tough now, but if we talked about them all the time, they would be common and everybody would be okay,
Yeah.
like in the future. And then like the beautiful part about insurance and how it was created is that you pool the money together, and by pooling the money together you protect everyone, you protect your community, you protect like the incomes of everyone. And then it's like it's such a amazing concept that it's
Yeah.
like, oh, I'm helping out those people, and I don't have to, help them out with GoFundMe. I can just help them out, be participating. That's why they call them participating whole life, because everyone is pulling their money together. The people that have your policy, they invest it, they make it grow, they pay you a dividend, and plus they give you peace of mind. Like,
Absolutely.
and that, what we started the show about, it was about, pennies. And again, it's just for pennies now. And what better way to build the future and the legacy, just by putting, like if you just went term and you got the basics for looking at here, $140 a month. So that's like, let's say $2,000 a year. You leave your kids with $650,000. Um, Hello, mic drop. All right. Anyways, yeah, very, very, very passionate.
It is one of my
Oh, we
favorite
have a
topics.
comment. Yeah, I know, because it's just like it's so foundational, right? It's just like, and we like, I never heard of anything like this. And one of the reasons why I got into financial services is because I wanted to learn more how money works, how how do you protect your family, how do you leave a legacy. And now that I'm learning it, it's like I'm fired up. Like it's everybody should know this. And it's just like, this is how I pick up the phone and start talking to people, right? Like it's just, it's essential uh to have purpose in life, right?
Yep.
But yeah, wouldn't hurt for your kids to tour a nursing home through school programs. Yeah. Yeah, there's some examples there. um
The bad thing, not many people in Canada are able to even afford nursing homes right now. Just think about those people. I've heard so many people who are struggling with their old age right now, not because of their living expenses, because they live too long. And which, like, I want to closing statements. The permanent base policy continues building tax-sheltered cash value through the infinite banking concept, providing liquidity for farm equipment, farm grades, educations, for the kids, for their retirement, for emergency, and even if they live longer, they don't have to worry. So, with this plan, Sprout family is covered from immediate risk till the very foresighted risk of living too long. We covered them for pretty much every situation and for every kind of uh, things that can arise once the main earning something happens to the main earning members. So this covers for them, and this is just the life insurance part. But we will be looking at disability and critical in brief, not that much in depth, for next time. And thank you, Rico, for having me tonight and talking about one of my favorite topics. Not only because it is concerned, because it is foundation. It is from where you're gonna build legacies. You're gonna build life for your family. If you don't have your foundation in place, or if you think it's fake, or if you don't know what it is exactly. You have insurance, but you don't know what it is exactly. Like it is term, it is universal, how it is solving your problem, or what it actually do. Feel free to reach out to me or Rico. We are there to help you, to educate you, and make you feel comfortable. Like people are not comfortable. That's why when they get insurance, they just get it done. That is their line. Just get it done. How much you gonna pay? $100. Oh, this is it. That's it's not that simple. It is not like you're buying milk or groceries over the counter. Hey, this is money. Just take it and give me the product. No, your if not yours, but your family's life depend on it. Just imagine how would you basically buy something which is related to your family. You go and get a car, like you check everything, brakes, technology, pretty much everything,
Hmm.
which
Yes.
takes your family from one place to another place. But why not a life insurance? Did you check the same way like you check the car,
Car.
or
Yeah.
or a TV when you're buying it with the full features or a laptop? You do a lot of research for these, but did you do your research when you were getting your life insurance? We just did it because your friend told you, or your advisor said this is the best, or you said I have only this much amount. So if you by any chance have come across with all of these questions, we haven't even think of these things, and you doubt that there's something wrong with your financial plan or your foundation, feel free to reach out to Rico or me on LinkedIn, and maybe for the next time I will ask Rico to publish his phone number and his email address on the background, so if someone
Oh.
even have a glimpse, they might just click, oh, I need to talk to this guy, they might get it. And
Yeah.
thank you, Rico, for
Oh.
basically helping me out on this mission to help as many people as we can. And this is what I meant when I said that we want to be different. It is not different only by money, but you will be different by how you're gonna change life for other people. And this is the
Mhm.
best way, by educating them.
Yeah. Yeah. I hear you. Yeah, thank you for coming on the show. It's always a pleasure having you, and thank you for everybody that made a comment, and is watching. We wouldn't be here without you and your attention. And I want to bring it back again because it's so the power of protection is so important, and this is how families build the legacy, not by chance but by design. So let's make those designs for you, learn about them, just like Gaurav said. You want to learn about how to do all these things. And yeah, if you want to reach out to us, please do. Next episode we're going to continue on with our life-changing and educational about uh, insurance, all the different types, like what Garv said. We're going to go into disability. We're going to show you a little bit more numbers. And don't forget to subscribe. I'm starting a newsletter, so I will have the links in the comments or down in the description. And if you have any questions, don't be afraid. Reach out. Thank you for watching, everybody, and have a great day or a great week. See you next week. Bye. All the best.